Welcome back. Well, let's get some red into the screen now. Dabur India has inked a deal to buy 51% stake in Badshah Masala, marking its foray into the red-hot spices segment. Mangalam is here in our value-add segment on Halftime Report on the Indian spice market. Mangalam, take it away.
Well, that's correct. You know, the Indian spice market is heating up, and the latest entrant in that is Dabur, with a 51% stake purchase of Badshah Masala for about 587 crores, valuing the company a little over 1100 crores. So what does that mean? By their own estimates, it is a 4.5 times FY23 price to sales and 20 times EV to EBITDA. So what does this mean? That Badshah's FY23 revenues are likely to be around 256 crores with margins of 23%, EBITDA of just shy of that 60 crore mark. However, the data point that stood out for me the most was that 82% of their revenues come in from blended spices sales. What are blended spices? Blended spices are basically not regular spices, but pav bhaji masala, kitchen king masala, chaat masala, so to say. It's marked their foray into a 25,000 spice category, which at 2020 was 24,000 crores, and by 2025 is estimated to be 50,000 crores. Why is that? Well, because currently only 24% of the market is organized branded. By 2025, this is likely to be 50%. And in that, the fastest growing segment will be that of blended spices. Currently, blended spices account for just 24% of the sales. Going forward, this is likely to be 65%. Why is blended spices the key growth driver? Well, because blended spices have 3 to 3.5 times higher realizations. I mean, you can take 5 different masalas and sell it separately, or you blend it as a pav bhaji masala and sell it for 3 to 3.5 times the price. And that means the gross margins jump from 33-35% all the way up to 50-odd%. What are the other drivers in the spice market? The biggest driver is the number of deals that have taken place. In November 2019, we had Investcorp investing almost 80 crores in Intergrow brands. Then May 2020, we had some other, big announcements as well. ITC entering the 2150 crore deal with Sunrise Foods. June 2020 and September 2020, we had big investments. A91 investing 125 crores in Push. And as of September, we had Okla and MTR buying Eastern Condiments for about 2,000 crores. In the listed space, we've heard, Tata consumers selling spices under the Tata Sampann brand, and Nestle as well, selling their Magic Masala under Masala-e-Magic, those brands. So it is a market which is growing fast. What are the key drivers for the growth? Higher share of organized market, higher gross margins, and increased experimenting in kitchens, which actually started during the COVID times itself. And also people need convenience, so they're ready to spend in masalas as against making them themselves, and higher brand stickiness. If you like a certain masala, you're likely to stick to it through your lifetime. But what are the problems for this market going forward? Regional local companies are the ones which dominate, because you want a certain taste coming in from a certain brand itself. So high stickiness can be a boon or a bane. Different cuisine and taste palettes in India are not one big company can succeed here, which is why we've seen a lot of regional players, and there has been a lack of success by MNCs in the past who've looked at this spice market. The question is, can Dabur spice things up here?
Okay, well, time will tell, Mangalam. Thanks very much for that extremely colorful analysis of the spice market.